In the hands of a researcher working with 19th century archives, a document inevitably appears that can be considered a starting point for understanding the institutional transformation of the European financial sector. This refers to the register of the Masonic Lodge Zur Einigkeit in the city of Frankfurt am Main, dated from the late 18th to early 19th century. In this list, under sequential numbers devoid of any mystical aura, are names that would soon become synonymous with global financial dominance. Meyer Amschel Rothschild and his sons did not merely attend meetings, they used the structure of the Freemasons as a ready-made, time-tested model for cross-border information management. For the historian paleographer, the analysis of these records reveals not ritual continuity, but a purely pragmatic adaptation of medieval corporate principles to the conditions of nascent capitalism. In an era when state borders were transparent to armies but closed to private capital, the Masonic network provided a system of trusted nodes, allowing verification of a counterparty anywhere in Europe without the risk of encountering a forged bill of exchange or direct betrayal. The political anatomy of the late 18th century represented the disintegration of old feudal institutions while maintaining their external shell. The Holy Roman Empire of the German nation in its last years was an intricate web of hundreds of sovereignties where each petty prince possessed his own right to mint coins and control customs. In this environment, a new type of conspiracy emerged, not a political coup aimed at seizing the throne, but a systemic penetration of private capital into state structures through the mechanisms of closed communities. The social composition of the participants in this process was heterogeneous. It was a fusion of the merchant elite, Jewish banking capital, which by law was restricted in rights and sought legitimization through alternative structures, and impoverished but influential nobility. It was here that Freemasonry played the role of a social elevator and simultaneously a security protocol. In the lodge, a banker from the ghetto and the Prince Elector of Hesse Castle found themselves bound by a system of oaths that had legal force within the corporate law of the order, often surpassing the enforceability of imperial laws. The mechanics of this interaction were based on strict hierarchy and specific methods of transmitting orders. Analysis of correspondence between London, Paris, and Frankfurt in the period from 1805 to 1815 shows the use of double encryption. The first level was standard commercial codes. The second was terminology borrowed from Masonic rituals, which served as a signal of the sender's authenticity. For example, the mention of building the temple in a financial report often meant not an actual building, but the beginning of the formation of a reserve fund to subsidize anti-Napoleonic coalitions. Meeting locations were chosen with logistical accessibility and the possibility of legal cover in mind. Thus, the mansion on New Court in London, where Nathan Rothschild established himself, functioned as an operational headquarters, closely linked to the lodges of the Grand Orient. Meeting timings were synchronized with the arrival of mail ships and couriers who traveled across Europe using diplomatic passports issued by petty German princes who were members of the same closed structures. A critical audit of this success is impossible without understanding how the system overcame crises. The main risk was not in the police, but in information leaks within the structure itself. However, here the principle of a cellular organization, inherited from medieval guilds, came into play. Each agent knew only the part of the plan that was necessary for his area of work. The success of the Rothschilds and their partners during the Napoleonic Wars was due to the creation of the first private intelligence network in history, which surpassed the state services of Britain and France in efficiency. The information flow passed through brothers in the ports of Ostend, Calais, and Hamburg. When, in 1812, the need arose to transfer gold for Wellington's army to Spain, the Masonic network provided logistics through the territory of hostile France. Financial flows were disguised as food purchases and payment of old debts, with each stage of the operation confirmed by the signatures of persons bound by oaths of silence. However, the history of this financial ascent also contains examples of systemic failures. In the reports of the Prussian secret police for 1834, testimonies of former employees of banking houses are recorded, describing attempts to physically suppress those who tried to take internal documentation outside the circle of initiates. The elimination of undesirable witnesses was not always physical. More often, economic strangulation and social isolation were applied, which, in the conditions of that time, was equivalent to the cessation of a person's existence in the legal field. Internal contradictions often arose over the distribution of profits between the national branches of families and their partners in the lodges. Thus, the conflict between the Parisian branch and the Frankfurt center in the 1840s led to a brief leak of data on Austria's state loan, which was immediately curbed through the direct intervention of the Supreme Councils of the Order, acting as arbitrators. Documentary analysis of sources requires special caution when working with interrogation protocols and anti-Masonic literature of that time. Many claims of a world conspiracy are the product of political orders from competitors, such as the Baring banking house in Britain, which was losing the struggle for government contracts. Contradictions in witness testimonies are often explained by the fact that, under pressure, or out of a desire for profit, they mixed the real administrative mechanisms of the lodges with fantastic details of rituals to make their stories more convincing to the layman. The real magic of Masonic banks was not in rituals, but in the creation of a legal precedent for the extraterritoriality of capital. They created a system where the king's debt to the bank was guaranteed not only by the bank's assets, but also by the personal oath of the monarch or his ministers within a closed society. The institutional approach allows us to trace how this model formed the basis of modern central banks. The structure of the Bank of England and, later, the U.S. Federal Reserve System bears clear traces of the corporate structure of the 18th century. This is manifested in the system of closed councils, the principles of co-opting members, and decision-making methods behind closed doors. There is no mysticism here, only a rigid administrative logic of protecting the interests of shareholders and the state, where the Masonic ethic of chosenness transformed into the concept of professional technocracy. The financial empires of the 19th century used lodges as a testing ground for developing methods of global governance, which are now implemented through international financial institutions and transnational corporations. In the epilogue of this investigation, it is worth turning to the lists of confiscated property during periods of various political reactions. When, in the mid-19th century, Masonic lodges were banned in several European countries, the archives seized by the authorities rarely contained descriptions of spells. Instead, investigators found registers of government bondholders, lists of trusted individuals in finance ministries, and detailed plans for railway construction, which strangely coincided with the spheres of influence of certain lodges. The fate of these archives was often predetermined. They either disappeared into the private collections of the same banking houses or were destroyed during wars. However, surviving fragments of diplomatic correspondence suggest that Masonic banks were not a secret government, but rather the most effective instrument of political economy of their era, transforming the system of oaths into the most reliable financial instrument in human history. The impact of these events on the legal system is immense. Modern norms of international banking law, compliance rules, and principles of banking secrecy are largely secularized and legalized versions of old order statutes designed to protect capital from sovereign arbitrary rule. If we examine the economic situation in Europe at the beginning of the 19th century, we will see that traditional business methods were paralyzed by total war. The continental blockade established by Napoleon Bonaparte made ordinary trade impossible. Under these conditions, it was the Masonic structure, penetrating both warring sides, that became the only channel through which money continued to flow. The protocols of the French Customs Service for 1811 record cases of ships being allowed through with cargo that was formally prohibited, based on specific accompanying documents signed by individuals whose loyalty to the emperor was officially unquestioned, but whose affiliation with the lodges placed them above national interests. This was not treason in its pure form. It was the realization of the concept of cosmopolitan capital, which recognizes only one priority: the preservation and accumulation of resources. The social composition of Masonic banking structures also deserves detailed study. In addition to the top financial elite, the system included hundreds of middle-level clerks, lawyers, and notaries. Their recruitment followed a classic pattern. A promising young man received a recommendation from his mentor at the university or patron at the bank. Joining a lodge became for him not only an act of spiritual search, but also the signing of an indefinite employment contract. Apostasy was punished by professional elimination, a complete inability to find work in the European financial sector. This system ensured an unprecedented level of personnel loyalty, which was critically important in the absence of digital tracking and verification systems. Every document, every bill of exchange that passed through the hands of such a clerk was protected by his personal oath, the violation of which entailed social death. A critical analysis of the reasons for the stability of this system shows that it was much more flexible than any state apparatus of that time. While monarchies depended on the personality of the ruler and dynastic crises, Masonic banks were governed by the collective intelligence of councils of elders. When a wave of revolutions swept across Europe in 1848, many aristocratic houses lost their influence and assets. However, banking empires connected with Freemasonry not only survived, but also financed the restoration of order. In the documents of the French provisional government of that year, one can find records of consultations with representatives of banking houses who offered loans in exchange for the preservation of certain administrative preferences. This once again confirms that the conspiracy did not aim to destroy the state as such. Its goal was the transformation of the state into a tool for serving financial interests. As for the system of encryption and information transfer, it was the pinnacle of engineering thought of its era. The use of sympathetic inks, microscopic marks on trade invoices, and complex book codes, where a specific page of a Masonic charter served as the key, allowed strategic orders to be transmitted across borders controlled by the gendarmerie. In the Vatican archives, which have always been hostile to Freemasonry, intercepted reports from agents of the Jesuit order are preserved, in which it is bitterly acknowledged that the children of the widow, the Masons' self-designation, had information about the movements of papal couriers even before the couriers themselves reached their destination. This indicates that informational superiority was a key factor in success, and lodges served as ideal relays for this information. Analyzing the failure of the few conspiracies that were nevertheless uncovered, the historian notes a common pattern. All of them perished due to the intervention of the human factor, personal ambitions or greed, which proved stronger than the oath system. However, in the case of Masonic banks, we see astonishing longevity. This is explained by the fact that the system was built not on fear of mystical punishment, but on a clear understanding of mutual benefit. Each participant knew that their well-being directly depended on the stability of the entire network. In the event of a threat to one of the members of the structure, the others mobilized colossal resources to protect him, or, if that was not possible, to minimize damage. In 1826, during the William Morgan affair in the USA, which caused a powerful anti-Masonic wave, financial institutions associated with the order demonstrated the ability to reallocate capital in such a way that key assets remained beyond the reach of the investigation. The epilogue of the history of 19th century Masonic banks seamlessly transitions into the present day. The principles that were laid down in the closed offices of Frankfurt and London 200 years ago are now the foundation of the global financial architecture. When we analyze modern methods of interbank settlements or the ownership structure of the largest investment funds, we see the same layering and the same concentration of power in the hands of a narrow circle of individuals, bound by obligations invisible to the general public. The historical investigation concludes that real power in the Middle Ages and modern times always sought secrecy, using any available institutional forms for its protection. Freemasonry did not create financial capitalism, but it provided it with the organizational matrix through which it could become a global force. The list of seized property at the end of this path is not just gold and land, it is time itself and the right to manage the future of entire peoples, recorded in debt obligations that outlived their creators by many centuries. When examining financial flows, one should pay attention to specific transactions related to colonial expansion. In the mid-19th century, the development of India, Africa, and Southeast Asia required enormous capital investments with a high degree of risk. State treasuries often hesitated to undertake such expenditures. Private syndicates stepped in, the core of which consisted of individuals belonging to lodges. The protocols of the East India Company contain directives that are essentially internal corporate directives of the order, disguised as commercial instructions. These orders concerned not only the trade in spices or opium, but also methods of political suppression of local elites who were unwilling to submit to the new financial logic. The cessation of existence of entire principalities in India was often preceded by a visit from a banking agent who offered loan terms that were knowingly impossible to fulfill, but presented in the form of a civilized agreement. Financial empires also actively used the system of fraternal networks to control the press. In the period from 1860 to 1880, France and England saw a process of mass acquisition of newspapers by representatives of banking circles. This was necessary to shape public opinion in favor of certain state loans or military interventions. The archives of the French Ministry of Interior preserve records of subsidies paid to editors of leading publications through shell foundations controlled by Masonic bankers. The goal was to create informational noise behind which real movements of capital and preparations for large financial machinations, such as the Panama Canal project, were hidden. When the Panama Canal affair was eventually exposed, it turned out that among the main beneficiaries, and those who facilitated the concealment of losses were a huge number of high-ranking Masons, which caused one of the loudest political crises of the century. However, even this crisis did not lead to the collapse of the system. On the contrary, it forced it to evolve. The conclusion was drawn about the need for even deeper integration into state structures, and a shift from direct bribery to the creation of long-term institutional dependencies. It was during this period that the concept of an independent central bank was born, which supposedly stands above politics, but in reality is managed by a board of directors formed from representatives of the same financial dynasties. A medieval historian sees in this a direct parallel with the system of immunities in feudal Europe, when certain territories or corporations were withdrawn from the jurisdiction of the king and came under the direct control of an order or the church. Institutional analysis shows that Masonic banks were at the forefront of globalization. They were the first to realize that information is a commodity and trust is a currency. In a world where there was no SWIFT system and electronic payments, a Masonic seal on a letter was a guarantee that a transfer would be made and an obligation fulfilled. This was the first attempt in history to create a single global economic space where rules were dictated not by monarchs but by capital holders. The tragedy of many states of that time was that they tried to fight this system with methods of the past, prohibitions and persecutions, while it was necessary to create their own alternative networks of trust. By the time governments realized the scale of the challenge, financial empires already controlled key communication nodes and infrastructure. In conclusion of our investigation, it is necessary to emphasize that the documented history of Masonic banks is not a story of mystical conspiracies in dark basements. It is a story of innovations in management, of the creation of effective bureaucratic chains, and of how closed communities can serve as a framework for building new economic realities. The archives do not lie. They show us the dry figures of reports, clear lists of participants, and cold-blooded plans for eliminating competitors. This was an era when money found its voice, and this voice spoke the language of order statutes. The influence of these events on our present cannot be overstated, as we still live in a world whose legal and financial contours were drawn with the compass and square of 19th century bankers, who managed to transform corporate solidarity into the most powerful instrument of political power.